I'm not seeing myself on the main screen. Do I start or not? Okay. Okay. Super. Okay, so I just go now. Okay, I go for it. So. Good morning, everybody. Sorry for the slight technical hitch. I have to tell you, first of all, the height of my experience with Zoom and Zoom webinars is family quizzes during the first lockdown. So I'm no expert. Thankfully, the team in Leo Donegal will be doing all the technicalities. So apologies for the delay there. I wasn't quite sure I was to start off. I'm Eileen Magnier. I'm doing MC here from Sligo. And I believe we're joined from people all over the country, which is really incredible, upwards of 400 people. And it just shows just how important this issue is to businesses across the country and not just in the border counties. So welcome to every one of you. And what we're doing here really, I suppose, is it's a very big deal really from the point of Leo Donegal. They've organised a fantastic opportunity for people to bring them up to speed on Brexit with just less than 100 days to go. So what it's all about is reinforcing the need for businesses to take action now in this short time frame. And what they've lined up are a number of very good speakers who are going to speak on the critical issues, things like updates on the Brexit negotiations, overview of specifics like customs, and the effect that Brexit is going to have on trade for businesses across the country. We'll also be joined by representatives of two businesses who are working through and preparing themselves for Brexit, and they're going to share their experience with us. But we're going to start off, actually I must welcome, as I say, people from all over the country, but we're joined from Luxembourg actually by Minister Charlie McConalogue, and he'll be with us shortly. Just want to welcome him. He's on official business over there. But the first person who's going to talk to us today, who's going to give us an overview of being Brexit ready, is the head of enterprise at the Donegal Local Enterprise Office, Michael Tunney. And I believe also there might be little gaps and delays, so just bear with us for all of this. So welcome, please, Michael Tunney.
Am I there or not?
You're on, Michael.
All right. I mean, that was a little bit. Thanks, Eileen. GAE Barmagin agus Fáilte, folks on behalf of the Local Enterprise Office and the Local Enterprise Office Network, you're all very welcome to this event this morning. I won't be giving an overview of Brexit because I don't have that expertise. I would just like to say a few words, I suppose, really, and put the event in context. We are organising this event under the Enterprise Europe Network in Ireland. And Enterprise Europe Network in Ireland is a consortium led by Enterprise Ireland, with the Leo network of 31 Leos involved, along with the Chambers of Commerce in Dublin and Cork. Enterprise Europe Network is a network of over 600 organisations in 60 countries around the world. And the European network itself is funded under the European Union under the COSME programme. And with the objectives really of enable SMEs, develop international and export opportunities, enhance their knowledge and capability. And very much focused on bringing companies together on an international basis to identify opportunities for collaboration and new developments. And that whole area of forming strategic alliances and relationships. And I suppose in the context of Brexit, it is a support that businesses should be looking at. And I would recommend that businesses who may be logging in today for the first time on an EEN event, look at the website www.een-ireland.ie. Today, as I say, is an event of the Leo EEN network, and it is our main event of the autumn of 2020. I think it's just about 4 years and 4 months since the UK decided to leave the European Union, and we have just over 70 days before they actually have left with or without a deal. Over the past 4 years, there has been a range of events organised to raise awareness of the potential issues and challenges, and a range of new supports also developed by government, which have been delivered through agencies such as Enterprise Ireland, Údarás na Gaeltachta, Intertrade Ireland and the Leos themselves, to assist firms look at these challenges and also to help them prepare for this departure of the UK. Today is the first of 2 days we are organising on the Brexit theme this autumn. The second day is on November the 12th, where there will be opportunities for business to meet on a one-to-one basis with Brexit-related experts, whether that be in customs, logistics, finance, regulations, and other areas. And we hope that today's panel of speakers and experts will help you in considering some of those potential challenges, and that is if you haven't already addressed them in your business. I think it was once said that whatever happens in your business does not happen by itself. While the time is short, there is still time to prepare for Brexit and the challenges that it may face and create for your business. We hope that you will find today both beneficial and insightful, and I, along with the rest of our team, look forward to hearing the speakers. Thank you very much. Back to you, Eileen.
Thanks, Michael. We're going to move straight away from here to Luxembourg to meet our first speaker, a person with a very important brief at the cabinet table these days, particularly in the context of Brexit, the Minister for Agriculture, Food and the Marine, Charlie McConalogue. And he was appointed to the job just in September. It seems like a lifetime ago now, but Charlie has a lot of experience in farming. He studied economics, politics, history, and he's been involved as a Fianna Fáil spokesperson and as a junior minister in areas like equality, children and agriculture as well. So very extensive experience. And I know he's very experienced at Zoom as well, because I waved to him the other day when he was talking to Letterkenny Chamber of Commerce. So we look forward to hearing what you have to say now, Charlie.
Yeah, thank you very much, Eileen. Can you hear me? You can? Yeah, you can hear me, yeah. And thanks, thanks to yourself, Michael, and thanks to all the Donegal Local Enterprise Office for organising this event on behalf of the 31 LEOs nationally. And I think it's a very timely event indeed, given the short running period now to the 1st of January. And I hope everybody gets good value from it this morning in terms of participation. I know there's a really strong panel of speakers which will cover all the bases in terms of where we're at and in terms of the next period ahead. As you mentioned, I'm in Luxembourg this morning. We hadn't planned to be here today. We'd hoped to be finished by yesterday evening, but we're here since Sunday night for the Agriculture and Fisheries Council meeting, and it was a council meeting which was signing off on the next CAP programme from a council point of view, and that's the first time that there would have been a 7-year CAP programme signed off without the British as UK as members. So certainly it was different in that regard, but it was important that we did get it signed off, given the other challenges ahead, and given the importance of giving certainty to the agricultural community in particular in relation to the structure of the next common agricultural policy. Thanks very much. I'm delighted to have the opportunity to address the event. And as I mentioned, there's just 70 days now left, and Brexit is increasingly becoming a reality for all of us. It's been somewhat overshadowed in recent times by all the focus on the pandemic, the challenges of the COVID-19 pandemic. But nonetheless, I think businesses certainly have had their focus on it as well. But obviously have been under pressure from many different angles. Of course, the political Brexit happened on the 31st of January this year, when the UK left the EU. But we still have the economic Brexit to come and to prepare for. Regardless of what the outcome will be now in terms of the EU-UK negotiations, a number of outcomes are already clear at this stage. And that's that in just over 2 months, the UK will be on the outside of the EU single market and customs union. And this means that things will change very soon, and we need to be ready for that change. And everyone needs to act now to ensure that we are prepared. The status quo is not, unfortunately, going to remain the same. We know that it is a very challenging time for business with the pandemic, but we have to be honest and clear about the real challenges that lie ahead arising out of Brexit. Stakeholder engagement is ongoing and crucial to informing and encouraging businesses to take immediate action. We have intensified our outreach to our stakeholders and will step up this further over the coming weeks. Tomorrow, I will be addressing the 15th meeting of the Consultative Committee of Stakeholders in Brexit. I think that the local enterprise offices have a critical role to play to help business prepare for Brexit and to help with outreach and communications to your members as well, and to businesses in your local area. Given my role as Minister for Agriculture, Food and the Marine, my remarks today will have a focus on agriculture and the fishery sectors and food. However, the main message around the need for businesses to make preparations now applies equally to all sectors. There will be changes for the Irish agri-food industry from the 1st of January 2021 with new customs and regulatory requirements, including sanitary and phytosanitary checks for importers of agri-food products from Great Britain. This means that any business that moves animals from agri-food goods subject to controls from, to, or through Great Britain will be subject to a range of customs formalities and SPS regulatory requirements that do not apply to such trade today. Complying with customs and regulatory requirements will increase the cost of trade and will result in delays in the movement of animals and goods, although every effort is being made to ensure that the minimum possible disruption to trade flows and to ensure that there will be the minimum disruption to trade flows and supply chains. Export certification requirements will also have to be fulfilled. The lack of certainty to date from the UK about what exactly they require in terms of their export requirements for Irish and other EU exporters to Great Britain has been disappointing and challenging. We are still awaiting confirmation of the details in the export health certification that will be required. Nevertheless, the publication of the UK border operations model and a revised version about 2 weeks ago was welcome. The UK will have a phased approach to the implementation of their import requirements, reflecting the state of preparedness on their behalf to carry out checks on imports. My department will be ready to provide certification for exports to Great Britain, but depending on the nature of the detailed requirements, significant challenges may lie ahead. Bilateral engagement continues at technical level between my department and DEFRA to understand the UK requirements. It is essential that businesses, no matter how small, who have not already done so, now take immediate steps to understand the impacts of these rules and processes and what the impact will be on their operations. With just over 2 months since the end of the transition period, obviously time is very short. It really is important that businesses that haven't acted do act now. This does obviously require planning and investment. It is not something that can be left to the last minute. Importantly, though, many of the changes that will or will not apply to trade between Ireland and Northern Ireland, and obviously that has been something that has been a big focus of the Brexit negotiations throughout last year. With regard to government budget support and preparations for Brexit, my department, as part of a whole government approach, has been preparing for Brexit now for over 4 years, since even before the UK's referendum in June 2016, to be as ready as possible for the various Brexit scenarios. A big focus of preparations has been on infrastructure in ports and airports, on staffing, on the development of robust IT support systems, and also in terms of communicating with stakeholders. My department has also ensured that the financial and budgetary measures were put in place to help the agri-food and fisheries sector over the last 5 budgets. Last week's budget provided an additional €39 million provided for the Brexit-related staff and infrastructure this year. This will ensure that my department will be in a position to fulfil its expanded control obligations at ports and airports to facilitate trade in agri-food products. Additional funding of €4 million has also been provided for Board BIA, bringing its total grant to €52 million. The additional funding allocation will support marketing and promotion activities to develop and build a premium position for our food and drink exports in the UK, in Europe, and in wider international markets. The central scenario underpinning Budget 2021 was that the transition period would end without a free trade agreement on the 31st of December. The government is establishing a €3.4 billion recovery fund to address the twin challenges of Brexit and COVID. I welcome the multi-annual financial framework agreement reached in July at European level, which includes a €5 billion Brexit adjustment fund for those member states most affected by Brexit. And I will work to ensure that the agri-food sector gets an adequate allocation from that funding. I'll ensure also that all supports are kept under review to help the sector prepare for and adapt to the new reality post-transition. Budget 2021 builds on last month's Brexit Readiness Action Plan, which sets out the steps that businesses and individuals need to take between now and the end of the transition period on the 31st of December. There are also customs training and supports available from Board BIA, from SkillsNet, Enterprise Ireland, and also through yourselves in the local enterprise offices. With regard to where negotiations currently at, time is certainly growing short, and a no-deal outcome is not in anyone's interest, and I think all are clear in that. However, in the absence of a free trade agreement between the UK and the EU, tariffs would apply to agri-food trade between Ireland and the UK, excluding Northern Ireland. The EU Common External Tariff Regime will apply to imports from Great Britain into Ireland, and the UK Global Tariff Regime would apply to Irish exports to Great Britain. The results of analysis done in relation to this are very stark for the agri-food sector. the combined impact of the UK tariff duties for all 2019 agri-food export data would indicate that it would be between 1.37 and 1.5 billion euro, which equates to an ad valorem equivalent of 28 to 30% extra. The combined impact of the MFN tariffs for all 2019 agri-food imports is between 715 million and 970 million, which would be equate about 18 and 21% of exports. So together taken, that equates to a total tariff burden of 2 to 2.5 billion, or circa 25% proportionally on Irish agri-food trade with the UK overall trade, which amounts, the overall trade amount we would do would be 8.5 to 10 billion. So it is very stark indeed, as you all know. With regard to fisheries, it has been given a high priority by Ireland, as indeed by other EU maritime states as well. We've now reached a very critical point in the negotiations, and we are very aware that no more than ever it's vital that member states continue to remain united in order to protect the EU's fishing industry and coastal communities over the coming period. I believe it is essential that we stay firm. We are concerned that if we give any ground, the UK would be confident that we would not be determined to use the leverage links between fisheries and other parts of the EU trade, the trade agreement under discussion fully. And it is really important from our point of view, given the importance of fisheries domestically, that we do use that to the maximum. Unity, cooperation and solidarity between member states are going to be vital over the coming days. With regard to the land bridge, which I know is of tremendous concern to businesses and is a critically important route to market for Irish and EU traders, especially for the agri-food sector, and its continued effective operation post-Brexit will be very much vital to all of us. We are continuing to work to ensure that the land bridge remains an effective and efficient route to market post-Brexit. This has been a key element of the government's Brexit strategy from the outset. We're also encouraging businesses to explore with the ferry companies whether direct routes to the continent would suit their needs. These direct routes are available at present, and there is a capacity on those routes. And finally, everyone, just to conclude, stakeholder preparedness for the changes that will come about on the 1st of January 2021 is absolutely essential. Anyone moving food, animals, animal products, plant products to, from or through Great Britain are reminded that the status quo will not remain the same, regardless of the outcome of the EU-UK negotiations. With just over 2 months until the end of the transition period, time is short and action is required now. Importers and exporters need to familiarise themselves with the customs and regulatory requirements that will be applying from the 1st of January 2021. And also, please be aware of the supports that are available to businesses, and we very much encourage you to avail of those. So I hope, Eileen, that gives an overview of where things are at and the critical point we're at. Obviously, our clear focus and objective is to ensure that we do get a trade agreement that is really essential to the economic welfare of all sectors of our economy and to the economic welfare of our country. Everything, we will be doing all we can, working with our European partners and other member states and Chairman Barnier's team over the time ahead. Obviously, the budget, as I outlined, has been framed on the basis of preparing for a no-deal Brexit, because we have to be ready in that eventuality. But make no mistake that while we are preparing and want to be ready for that, and all businesses need to be ready and consider their preparedness with regard to that, but particularly in relation to the changes that will happen on the 1st of January, we are making every effort to ensure that there will be a comprehensive free trade agreement that will be in the interest of our country, of the European Union, and also of the UK. So thanks, Eileen, and thanks, Michael, and I wish you and all of you the very best with the rest of the conference this morning, and I'm looking forward now to getting back home and back on home soil after 3 long days here. So thank you very much.
Thanks, Minister, and thanks for all your hard work in relation to it. I'm sure it's going to be a hectic couple of months ahead for you. It's a very stark reality that you paint, but it just highlights the need for everyone to get on board and to get prepared. Time is short. And obviously the Minister's speech and the talks we're going to have coming up will raise certain questions for people. If you have a question, we've a brief Q&A session penciled in towards the end. submit your questions via the chat button. If we can get to them, we will. But if we don't get to them in this session, I'm sure the team in Leo Donegal will get back to you or will send you links and send you the relevant information. So we move on now to our next speaker. He's the Brexit lead with EY Ireland, Simon McAllister. He leads a team of 40 professionals in the valuation, modelling and economics team across the company's offices in Belfast, Cork and Dublin. His particular expertise in agriculture and aviation. And Simon is going to give us an economic update now.
Thanks, Eileen. I'm just going to bring everyone through our current views around where we see some of the bigger economic trends going at the moment. Obviously, the big issue for everybody is, over the next 3 or 6 months, we could have this overlapping impact of Brexit and the COVID disruption. Clearly, with the recent changes to lockdown across the Republic, we're looking again at another knock to our economic performance over 2020 and very, very significant individual challenges for businesses. Government expectations are that, over the course of the next week or so, we could see up to 100,000 people losing their jobs and coming back onto the state supports, which is a really, really significant personal impact for all of those people, significant impact for all business owners, and a very significant drain on state resources as well. So I just want to start with the overall expectations for some of the bigger economies, a lot of which, many of you may be trading with. What this chart is just showing is the forecast expectations at different points in time over the year. The blue dot all above the line were the expectations before COVID, and then the others are various points over the year. And there's probably 2 points I'd make from this. One is that the disparity between some of them, if you take individual countries and take the Irish one as obviously the one closest to home, very, very big gaps between some of the forecasts. And that shows just the difficulty of trying to predict what's going to be happening over the next time period due to COVID. And that's partly because the sort of impact we're seeing across the economy is driven by factors and with causes or consequences that we've just never experienced before. And therefore, economists are finding it really, really hard to try and predict what's going to be happening. The second point is that the expectations have been improving. So generally speaking, if you take that yellow triangle or yellow diamond, the purple one above it is above it, which means that the forecast is better in nearly all of the markets. And I think that's a sign that, partly the understanding to that point I just made is slightly improving. And also, as we get better, particularly in some jurisdictions where the control of COVID has become better, the economy obviously starts to release and the expectation improves. But it's really, really difficult to expect people to be able to predict some of these with certainty, and I'll touch on that again in a minute. So our contraction, so Q2 being the 3 months up to June, was the really key period when we were in the most severe part of the lockdown, when businesses more so than are now and will be over the next 6 weeks have been shut. Things like construction that are now going to be staying open, they have been closed. We were in a full lockdown. And really, it's a tale of where the sort of impact was. And the headline number of GDP was a 6% contraction, which contrasts to 20% in the UK. And in some markets, I was talking to a colleague in South Africa just last week, and they said they had a 50% contraction in GDP. I think the challenge for us is that 6% is really only a headline that for many, many of us really doesn't tell, even half of the story. You can see from some of the components of this that consumption, domestic spending in the economy, going into a lot of our businesses fell very, very significantly at 20%. But government spending, because of all of the additional expenditure on health and on social security, very, very significant improvement there. And then the biggest one really in terms of numerical terms was exports were only down by 3%. And because we had such a very significant part in pharmaceuticals, life sciences, medical technologies, a lot of those exports were very, very significant. And that means that 6% GDP really doesn't tell the story at all, which is a tale of two economies: an export-focused, in most part, large business impact versus the SME impact, which is completely different, where businesses were forced to close, and when they did reopen, they were dealing with very, very significantly reduced demand. And I think this will be the feature again of the coming 6-week period, where we have a lot of mandated closures across retail, hospitality, but in large part, a lot of manufacturing and larger export businesses will remain open. The impact in the UK, which of course is important to us because of the fact that this covers the Northern Irish economy, which a lot of you will be either operating in or trading with, and the larger UK economy, which is a feature of how next year is going to go, regardless of whatever sort of deal outcome we get on Brexit. Their economy really, really has contracted much more significantly than ours. They measure their government spending in a different way to ours, so that's just one point to note in terms of the differences there. Clearly, in cash terms, they did spend a lot more money than they would have in the first quarter, but things like exports were very, very significantly down, and consumption was very significantly down for them as well. And consumption is a much bigger part of their economy. So this chart is just showing how we make up our economy. And the only point I just want to draw out here is that our economy is very different to the UK economy. Our economy is much more about trade. So those exports and imports numbers, so all of these percentages, they add to zero, but the imports is a negative number because of the way we calculate GDP. Imports and exports is what drives our economy because we're such an open trading economy. Whereas in the UK, the consumer spending is the vast majority of it. And then the government spending is a much more significant part than ours here. So when there is changes like we've had, and as we may have now with reduced demand over the, if there was a no deal situation where prices would significantly increase, where products would be off shelves and would have stock out situations, the impact on the UK economy could be very, very significant next year as well. Our current outlook for the growth in 2021 for the Republic of Ireland is 6.6%. Slightly lower in Northern Ireland at 5.5%, and then effectively in between the UK at 6% for the overall UK market. And obviously that follows reductions of, at the moment it looks like around 10% overall for each of the economies. That 2020 number preceded our release of the Q2 numbers, so we'll probably be pulling that contraction down in our pending forecasts in November. We probably expect somewhere between a 6 and an 8% reduction. And you can see as you look out over the latter periods, 22, 23, 24, it will take a period of time for us to get back to the previous levels of where we were ending 2019. And that has implications in terms of where people are planning investments, where you're thinking about capacity, whether that's in terms of your human or headcount capacity, or whether it's in terms of physical capacity if you're manufacturing, exporting. The other point I'd make goes back to my earlier one, that if you look on the right-hand side of the page here, you can see the very, very broad spread of range of forecasts. And if you take from maybe June onwards, where we had started to release lockdowns and where I think there was a bit more understanding, you still have a very significant range from as low as 1.7% last month with Davy to as high as 11% from IBEC. And I think, the better economists amongst all of these people will probably be the ones who say, here's a view, here are the bigger drivers of it. And probably the only thing I can guarantee is that the number is wrong. It's only a question of how much, and recognizing that there's a lot of uncertainty and a lot of difficulty around trying to get these numbers accurate at the moment. So for us in Ireland, when we try and unpick that headline GDP number, we always try and think about the domestic component, and particularly when we're talking about SME impacts and talking to SME audiences, it's very much about what is being spent locally in the economy. It's less about the headline export numbers. And that means that the labour market and what's happening in the labour market in employment, which then feeds through to consumption, is a much more tangible sign of what's actually happening in the economy. And it's probably a better indicator for a lot of SMEs as well in terms of the pending demand. Now, there's a lot of numbers on this, but I'll just touch on one or two of them. What it's just doing is for both ROI and for Northern Ireland, in white, we're putting up the maximum number for each of these areas. So whether that was the increase in the live register or the total numbers on the various schemes in both jurisdictions. And then in purple below, the current numbers. The big headline in Ireland has been that, at its peak, we had over 600,000 people, which is nearly a third of the overall labour force, quarter to a third of the labour force on some sort of supports. And the PUP has come down very, very significantly. So it's now at less than half. But as I mentioned, government expectations are about 100,000 unemployed over the next 6 weeks. So those schemes are likely to see an increase over the next week or two. The Northern Irish reduction has actually been very encouraging. They have significantly reduced the numbers on furlough. Still quite a lot of self-employed people who look like they're in trouble, and obviously self-employed covers a wide variety from doctors and dentists, accountants, and all the way to include trades and various tradespeople. Their claimant on the number in terms of effectively their equivalent of the live register, still very significant, however, so not actually a big reduction. So that trend in the live register, the trend in the numbers drawing on the wage support, the department publishes those numbers reasonably frequently, and I think they're a very good insight into what is happening right now. But also, I think it's a good insight into what do we think could happen as we get into winter and into early next year. Because the really, horrible reality is that a lot of the people on those various schemes are people who will not be returning to jobs, and that they will be made redundant at a point where the business eventually ceases to be viable, or the business has to make such significant restructuring that they're laying off large parts of that workforce. And that would be when those support schemes come to an end. The worry in the UK would be that a lot of those schemes have now, either come to an end or they're being tailed down quite significantly. And therefore the level of insolvencies may start to rise in the UK, and the level of people who are, meeting the full definition of unemployed will probably start to increase as we go into the winter. And that obviously feeds into wider impacts for everyone on this call in terms of the macro demand in the UK economy for products or services that we may be trading or exporting to them. Now, as we came through the summer, there was some sort of signs of recovery, and obviously the news here and to a lesser extent in the UK, or sorry, in Northern Ireland, because they have a different type of, they've had a different response to COVID. They're keeping the retail open, but they're closing schools, and we're obviously doing the opposite in the Republic. But there had been some signs of recovery. So the services sector was expanding again. So it was 52. So anything over 50 is expansion. Manufacturing sector had been expanding, so 52.3, and very, very significant recoveries in July at 57. But it wasn't all, consistently good news, because we saw pricing fell in both manufacturing and services, and we did see employment falling as well, which again I think is probably a factor of, as schemes came to an end, or in the Republic as they were adjusted to bring some of the earnings support levels down, that people moved effectively into full unemployment at that point rather than being on a support scheme. In Northern Ireland, there was probably a little bit of optimism as well. They did lose a bit of momentum there compared to here. The unemployment, or the decrease in employment in all sectors, was significantly lower at 42, so a big contraction against that 50. And in terms of the order book, which is a good leading indicator of activity, that was contracting as well at below 50. But they did have some expansion in the services sector. So the news is mixed, and obviously this makes it, again, a lot more difficult, particularly with the current restrictions, to form very clear views around where we think the economic trends are going in both jurisdictions. Really stepping up to kind of a higher level, just and starting to link this to Brexit, we will see more volatility between now and Christmas. We've seen volatility, even just on Friday, there was big sell-offs in sterling when Prime Minister Johnson said they were withdrawing from the trade talks. The FX markets have shown over the last few months that they aren't really fully pricing in the potential volatility around no deal or around the disruption in the trade talks, largely because, like most of us, they're struggling to sort of really make sense of it, which means that there will be volatility up or down. And I really would not predict whether that would be up or down, because I think the FX situation is so complicated that it's really difficult even to be directional. But the advice always, from us and others who look at Treasury would be, don't try and, make a gain on this. It's about protection in the short term. It's about trying to get a natural hedge if you can. But for a lot of businesses, that currency exposure is probably the most immediate issue that they'll need to manage in terms of trade with the UK. So in terms of the outlook, and again, I want to try and bring this back to something practical rather than the macroeconomic pieces. And since the start of lockdown globally, we've started doing a lot of additional analysis around consumers and how consumers are behaving. And we've tried to categorize them into what people are doing now, what they'll do next in the short term, and what they'll do in the beyond, which is in the longer term. And what we've seen is that we have people who are, putting themselves, or we're asking to categorize them into buckets. So in the now, back in lockdown, they were hibernating, but they were still spending, just to take that example. So 17% of people, or they were really, really cutting deep at the bottom of the end of the graph there of 16%. And what you can see is that there will be a change as we move through the cycle of COVID and as we get out beyond it into, a return to normality post-vaccine and everything else, which is something that you need to start to think about, because your consumers will follow broadly this pattern and they will react differently now to how they are reacting, in the middle of the next lockdown, let's say, for those of us in the Republic. And that will change how they think about their buying decisions as we move beyond it. So social considerations, so we say society first here will be a very big buying decision for some people as we move beyond. Planet will be a big one in terms of climate and sustainability more broadly. So you can see that, it's very simple to sort of categorize people into thinking about price or about some of the other more conventional ways in which we would have thought about pricing and consumer demand in the past. It is really, really complicated trying to do this forecasting, as I've mentioned, and that is only a mirror of how complicated the business environment is for all of you. And the macroeconomic trends is only one piece. We're all talking about Brexit this morning, and that's one of the 6 on this page. There is a lot of other issues there which are impacting all of our businesses. So we have things like climate and sustainability, which has dropped down the radar at government levels because they're so consumed with Brexit and COVID, but it's still there. It's not going away. It's very front of mind for consumers. We have quality of life, which is, probably, in my view, one of our biggest issues as we come into the winter for all of our staff and our teams, that they are getting burnt out. Those who are working at home, that the walls are closing in. This is something that is really, really that consumes a lot of time, a lot of management time, which means that you have less time to think about some of the areas that we'll talk about on this call in terms of taking action for things like Brexit, which obviously are coming up quickly. At the government level, we have a very, very significant debt picture that is only getting bigger over this year and next year. We were really starting to make progress on that, and then COVID has intervened. Add that to a tax position where we are really now overly reliant on our corporation tax position, that we have a very tight concentration on a small number of very large multinationals. I mean, it really gives the lie to the fact, to the accusation that these guys don't pay taxes. It's a different argument as to whether they pay the right amount of tax, but they are paying the bulk of tax at the moment. And if that mobile investment, or if that global deterioration, which would impact their cash flows, was to retrench, that puts the government in a difficult position from a tax point of view. So just our view, bringing this back to Brexit very clearly, at the moment, we think there literally is a 50-50 chance of whether there is a deal done or not. This is something that has been echoed at government level in the UK. My Brexit lead equivalent in the UK would be a bit more bearish, actually, and say that there's probably a higher chance of no deal. Contacts we've had at various levels in the last week or so would cause me to be slightly more optimistic. But the challenge will be that that basic free trade agreement, if it is done, is at risk of not covering a lot of things. It won't cover a lot of things to do with services, which will impact a lot of you. It may not cover things like data and financial services. So there's still an awful lot of disruption and potential areas of risk to all of our businesses that we still need to be taking action on, a lot of which we'll come to later on. So that is an overview from me. I suppose the key messages I'd leave you with: the economic outlook, is no surprise to say it's very uncertain. It's difficult to be, exact about the kinds of impacts, but I wouldn't let that get in the way of trying to take the protective actions you need to take, both in terms of the immediate issues, if you're suffering from some of the lockdown restrictions, and more importantly, as we look out over the next 3 and 6 months, taking some of the actions that you need to take about Brexit. There is a lot of uncertainty. The Northern Ireland Protocol in particular continues to be probably the most uncertain part of it, but there is things we know. There is things we can plan for. There is customs paperwork we know we will be needing. There is changes to our systems we know we need to make, and we should be making those and not taking the past approach, which worked for some businesses, of saying it'll be all right on the night. That will not work this time. That is absolutely guaranteed. So Eileen, I'll hand back to you.
Thank you very much, Simon. An awful lot to take in there. I'm going to move swiftly on because I know our next speaker doesn't have is tight for time. But just before we introduce our next speaker, apologies, I said about the questions and answers to put them into chat. It shows how technological savvy I am with Zoom. There's a specific Q&A button at the bottom of your screen, so please submit your questions there. So moving swiftly on, another Simon to introduce to you now. Our next speaker is Simon McKeever. He's the CEO of the Irish Exporters Association, and he's going to talk about the Brexit effects on logistics of trading north, south, east and west.
Good morning, Eileen. Can everybody hear me? Can you hear me, Eileen?
Yeah.
Okay, I shall now attempt to share my screen, given all the training that you all gave me yesterday. So let's have a go at that. Is that working? Hang on, I went to press the share button. Is that working? Okay, I can't hear you anymore, Eileen. Can you?
Yes, Simon, that's working.
Perfect. Okay. Sorry, if I just do this, that goes across my whole screen. Okay, so I need to just show it in this format, if that's okay with everybody. Okay. Well, look. Thank you for inviting me to speak to everybody this morning. It's a cold morning in Dublin here, and I think there is a lot of reasons to be cold about a lot of other things as well. I don't particularly want to spend an awful lot of time talking about COVID-19 and that. Let's talk about Brexit. And just before I do that, let me just tell you a little bit about ourselves so you get an idea of what we do. We're a older organization. We're around since 1951. I always say it was set up by a group of gentlemen with a set of Department of Health glasses, as it looks like. I used to look around my boardroom and you see these glasses of these gentlemen sitting around it. We're a much more diverse organization now, thankfully. We have a bit of everything in our membership, from largely manufacturing companies through to and that would be the FDI sector, right down to smaller companies as well. But we have all the transport infrastructure, the transport companies in it as well. So we really represent the whole export industry. It's not just the and all the people supply into that. It's not just the manufacturing or the exporting companies as well. That's just we have a annual awards. Unfortunately, we couldn't have it this year due to COVID-19. We're hoping to try and have it at the end of the summer next year. But that's East Coast Bakehouse celebrating last year, so we do celebrate the industry as well. I noticed that there was a couple of questions, Seamus, Eileen, that had come in beforehand, and they all relate to kind of customs preparedness. As an organisation, we are one of the training providers to the Irish government's Clear Customs programme. So that's the free to Irish companies training for what you need to know to get ready for Brexit. So that's a skill net, clearcustoms.ie. You can get it through the CILT skill net, or come through our own website, irishexporters.ie. But it is free training that is available on customs.
Simon, can I interrupt you just for a brief minute? Your slides aren't moving. Can you do a slide share there, please?
Oh yes, it says my screen sharing has paused. Whatever that means. You share. Let's do a you share. Way. How's that?
Yes, we have another one up now.
Okay.
About expert training courses. Is that what you want to show?
That's the one. Yeah. That's
okay.
Okay, so I may need to share each slide basically. So just to say, as I mentioned, CILT, the CILT Clear Customs training, which is provided by the government for free. Come to us if you want to be a part of that. We operate a lot of other training courses, some of which are a lot more detailed from that, but they're all around customs preparedness. They're they're all around customs preparedness, largely for Brexit and for third market. And those are the type of ones that we do. The GDP is not customs, but we train people how to get prepared for authorized economic operator. If you were to go for that now, you wouldn't have your status in time for Brexit. But it is there. Customs awareness levels 1 and 2. And I'm hoping that I'm answering those 4 questions that have come through by putting these out there. Whether there is a deal or there isn't a deal, you are going to need to know about customs. It's the one thing you're really, really, really going to need to know. So you need this stuff. So look, if we can help, please take a look at our website where we can point you towards our own training, or also the stuff that's available from the government for free. Ours is a lot more detailed. Let's just see. Has that come up, Eileen?
Yes, you have another one up there. You swear I know what I was talking about. I'm told you need to do slideshow.
That makes
But
2.
there's another one there now, developing policy positions and strategies.
Cool. It looks like it's working. So look, I mean, our principal role is really to represent the export industry, and we have 3 core themes: Brexit and market diversification. We've been calling out Brexit since 2015, since before the vote. Sustainable trade and investment is really going to be the next big impact tidal wave coming down on our economy. And trade compliance is in our core DNA. And obviously, given the pandemic, we've been very heavily involved in that. And we do that through our National Council. We have a series of regional networks that we work. There is one in the Northwest, which are a number of our members partake in every month. And we have a regular set of calls with our members individually with our relationship management team. These are the different kind of groups that we sit on with the government. So we are in a very active dialogue with government all the time. So let's just talk about, and I heard the other Simon talking about what his own view is on where we are. I'm probably slightly more optimistic in terms of where do I think we're going to get a deal. I say it, but I before I say what my opinion is on that, what I want to tell you is that we need to be critically aware that there is a bunch of people who sit around Boris Johnson who are absolutely determined to drive the Brexit bus over the cliff, come what may. And so I think that we need to be absolutely aware that the politics in the UK has driven this, the politics within the Conservative Party has driven this. And with an aim to kind of hang on to the votes that the Conservative Party has won off the Labour Party. So I think sitting in the background of this is, for having won the election with a landslide majority, for him to stay in power, which is the less palatable option for him to be able to sell to the public. A no Brexit deal or an unpalatable deal. And that's a very thin line between the two of those. So I am still a little bit more optimistic than pessimistic that we will get a deal over the next few weeks. I think that the Northern Ireland Protocol will be respected come what may. And I hope I don't get shot down for saying that, but I do think it will. And I think that things have been worked through, and despite the shenanigans of last week on both sides of the negotiating calendar, but particularly within the UK, I believe that talks will continue. So, will you be affected if you are selling goods to the UK? You will be affected. If you are importing goods from the UK, you will be affected. If you're sending goods through the UK to any other part of the world, but particularly into the European Union, you will be affected because you will need transit documentation. If you are using materials, or your part of your supply chain is coming from the UK, going to the UK, or from any other part of the world that happens to be transiting through the UK, and sorry, let's say the UK, but I say Britain really in this, you will be affected. And whether there is a deal or whether there is not a deal, you will be affected. So even if there is a deal, a lot of this stuff is not going to go away. So, and the biggest issues as we see them at the moment is around the need for people to understand the customs paperwork, the rules of origin, the tariff codes, Incoterms, things like that, because if there is a no deal Brexit, you will have sitting on top of all the customs paperwork, you will have tariffs, and you'll have tariff codes that you will need to understand. As a bare minimum, even if there is a deal, customs paperwork, which will be electronic at that point, will need to be filled out. And just be aware that it is the exporters responsibility to ensure that the information they either put into the system themselves or that they provide to their carrier is correct. Okay, so it will come back on the exporter or the importer to ensure that that information is correct. Let's talk a little bit about the land bridge. So the land bridge is how a predominant part of Irish freight gets to and from the continent. Whether that's going from Dublin Port through Holyhead and out through Dover, if it's Ro-Ro, that's the biggest kind of route. But Rosslare is getting an increasing amount of freight moving through it, both through the UK and directly to the continent. So the issue with the land bridge, as we see it, is that there's an absolute preference for companies to continue to use the land bridge to get freight to the continent. The issue is going to become in British ports on the exit of Britain. That's where the issue is going to be, because this country has spent a huge amount of money and invested a huge amount of resources, particularly into the ports of Dublin and Rosslare, to get the hard infrastructure put in place that needs to be put there. Our belief is that Britain is very far behind in terms of having that infrastructure in place. So the likelihood is that although Britain will open its ports for the first 6 months next year and allow freight to come into it, it is on the exit point going back out into parts of the European Union that there will be difficulty. So there is no doubt in my mind, and if you look at the FT on Monday morning, they have a photograph in it of the latest truck park that has been built on the M20 in Kent. It's enormous. So there's no doubt in my mind there is going to be tailbacks, and these tailbacks will affect Irish freight, because there is no way of separating Irish freight out of British freight or Polish freight or French freight or whatever freight is going through it. And the nature of Irish freight tends to be, if you're a very large exporter, then you probably have all the items that are in that container or in that truck. But the nature of Irish freight is that there is a number of very small freight companies that are carrying that freight, either with their own customer base or with on behalf of some of the larger ones. And the way that their economic model works is that they pick up a load in Ireland, go through the port in Dublin or Rosslare, arrive in Holyhead and drop off 40 to 50% of that freight as they go through the UK, through Britain, and pick up British freight then as they drive through Britain and arrive down in Dover. So how can you separate what's in the lorry? And although the European Union is moving towards having these green lanes on inward bound freight and outward bound freight through the French ports and the Dutch ports and that, there's no way that's going to happen in Britain. There's no way, because I mean, can you imagine what the British and other truckers would feel if Irish trucks are just waved through? So we have very serious concerns that come for the 1st of January. Britain is not ready for this, and Irish freight will be congested. And we're already seeing stockpiling beginning to happen again in certain items and certain goods at the moment, as we did in the run up to the last Brexit cliff edges. So what we're asking people to do is to look at direct shipping routes as an alternative. So just going back to that last one, you can see the different routes that there currently are, whether it's directly through the land bridge, or there's more and more and increasingly more shipping put on, and we see that there will be potentially more shipping put on with direct routes to the continent. It's not very helpful if you've got perishable items in the truck. But we are seeing more companies looking at this, and my advice to companies is if you can send it away from the land bridge, you should seriously be considering that now, and looking at that as an alternative to using the land bridge. It does take longer, but you should contact your freight provider and at least investigate what options that you have available, because we know in the run up to the last cliff edge that more and more companies were testing it, and we're seeing it now. So I think there's a fair part of what's going to happen in actuality between Northern Ireland and around the Northern Ireland Protocol that still yet needs to be delivered. But for all intents and purposes, Northern Ireland will be in de facto in the EU customs code. But legally it is in the UK's customs territory. And that brings questions down the road as to, number one, when you look at free trade agreements, will Northern Ireland have access to the EU's free trade agreements? We don't believe that they will. And we don't believe that they will because it is not up to either the EU or the UK to designate that. It's actually up to the third country. So if there is a trade deal with Bolivia or whatever country it may be, they will interpret the legal side of things, and the legal side of things is that Northern Ireland sits in the UK's customs territory. So there's a bit of work that needs to be done in relation to that. If you come a step back from that, that has issues around rules of origin as well. So when you break down the items that are sitting in the container, how much of it are UK or European sourced? So there is issues around this. There is issues around this in relation to items that are made that are moving back and forth between the Republic and the North on a number of bases. But the nature of the Northern Ireland Protocol is to allow us to have what we currently have at the moment on the island of Ireland. So that's my view on the Northern Ireland Protocol. Issues at stake in the negotiations. So you hear Boris Johnson talking about, and I think Michael Gove, all we want is a Canada-style deal. I think what we're heading towards is, and if we get it, is an extremely narrow trade deal that will allow for zero tariffs and zero quotas. Beyond that, I'm not quite sure there will be an awful lot sitting in it. The Australian one is pretty much a misnomer. It's really acting on WTO rules, which will involve a lot of tariffs and quotas sitting on it. No agreement. The kind of issues that are sitting out there, the level playing field, and there's discussion still going on in relation to that. Fisheries is, I think people need to understand in relation to fisheries that it is an emotive issue. It is linked to sovereignty. In my view, the Brexit vote was not really around immigration, that it was more about sovereignty. And fisheries is a sovereign issue. And a country's territory is both the land and its economic area, its extended economic area, which is the land going down off the continental shelf, and that, and the Britain, the UK has the largest one of that in Europe. I think Ireland is the second largest. So the issue is around how do you solve what is emotive, and the protocol in Northern Ireland there needs to be some final work done on that. So just to finish up, there is a lot of resources out there. There is a lot of help available, and for our members, we provide a lot of one-to-one support for them, where we try and help them with the issues that they're having. We provide a lot of training. So this is the kind of thing that you need to look at. There is a Department of Business or Jobs, Enterprise and Innovations readiness checklist. You should have a look at that and see where you are in relation to that. There's the Readiness Action Plan. That's a pretty useful thing to have. If you haven't got an EORI number, please go and get an EORI number, because even if you're an occasional if you are an occasional importer or exporter of items to or from or through the UK, you are going to need that. And what is an occasional exporter or importer? Well, to give you an example, I met this lady in I think it was Galway who ran a wedding dress shop, and she asked me at one of these events, I'm not an exporter, am I? And what she was doing was that people were buying online items off her, and they were buying them from the UK, and she had to ship them to the UK. So yes, she is an exporter. So even if it's only small items, even if it's only occasional that you're doing, then you will need an EORI number. And it's quite shocking to see the amount of companies that don't have the EORI number, and you need to get onto revenue in relation to that. You need to identify your exposure and your risk. So who are you trading with? Where are the items coming from? What are the rules of origin in relation to that? What are the tariff codes in relation to that? You need to know all this kind of stuff. And you need to know about customs. It's the number one thing. So the number one thing is customs. Are you prepared for that? Number two is your routing. Are you prepared for that? There is issues around VAT as well. If you're exporting or importing animal derived products, food, then you need to know your SPS obligations, product certification. I mean, the latest ad that the government is putting out there at the moment is the item that you're selling in Ireland, does it have a BSI on it? Is it got a British standards on it? It will need a European standard on it. And as I mentioned before, then just alternative routing is a clear one. These are the kind of things you can put in place to mitigate your customs obligations. I've mentioned some of them already beforehand. And I think that's it, Eileen, from us. I could take one or two questions before I go. I need to go in about 3 or 4 minutes, but I could take one or two questions if it helps.
We're kind of under pressure, so we might just move on, and we can put, if people have specific questions, they can put them in the Q&A thing, and we'll have them dealt with later, Simon. But thanks a million, and it's great to hear a bit of optimism, however slight. But Simon was mentioning there that deal or no deal, there will still be customs, and we're going to go into some of the specifics about being Brexit ready now with our next speaker. Issues like customs, regulations, trade, supply chain. So will you please welcome our next speaker? It's Carol Lynch. She's a partner in the BDO Customs and International Trade Services Department. Over to you, Carol.
Hi, how are you, everybody? I'm just looking to share my screen here. So share screen, and there we go. Just going to bring this back to the start. Sorry, just give me 1 second to put this on. There we go. Okay, so thank you for that. And thanks, Simon, for the lead into the customs presentation. So what I'm going to talk to everybody today about is probably a lot more of the operational and detailed requirements in relation to how you're going to move goods and declare goods to customs post 1 January and what the import and export requirements are. Obviously, I can't go through everything. It's a 20-minute presentation, so I'm just going to really hit the highlights, and then if there's any questions, we can take those at the end. So as you know, the Brexit transition ends on 31st of December, and importing and exporting from Great Britain will be the same as trading with any non-EU country from 1st of January. Just putting a condition on that it is the UK is so close, or GB is so close, it's not quite the same as trading with the States or Canada, but technically in terms of legislation, it is going to be the same. In terms of the current status of the talks regarding a free trade agreement, they are ongoing, as Simon has said, so I'm not going to really discuss those in any further detail. What I'm really going to focus on in this presentation is the compliance requirements that are going to come into effect from 1st of January and are going to apply regardless of the outcome of the trade discussions that are happening at the moment. And sometimes people do have a tendency to see the word free trade agreement and think that that means really what it says in many ways, a free trade agreement. And unfortunately, that's a bit of a misnomer, a bit misguiding, insofar as a free trade agreement allows you to import and export goods without the payment of customs duty, depending on the scope of the trade agreement, if you qualify as originating. It doesn't, however, remove the requirement to actually lodge your import and export declarations and comply with every other aspect of customs. So in many ways, it's just one of the requirements of customs. So I thought it might be useful to just go through some of the typical questions that we get asked, and hopefully that will address a number of questions that everybody here will have today. So the first question is always, will duty be payable on trade between the UK and the Republic of Ireland going forward? And that's very much dependent on the outcome of the trade agreement talks at the moment. So if the trade agreement is successful, then it will be very likely there will be a 0% duty across the board. And most products should be subject to a 0% duty rate. If we look at the Canada agreement that the UK would refer to, 92% of products that are traded between the EU and Canada would be traded now on a duty-free basis. And as I said, the next question is always, is there customs declarations if there is a trade agreement? And the answer to that is yes. So it doesn't matter at this point whether the trade agreement is or is not successful for the purposes of trade declarations and import-export requirements. They are going to come into effect on 1 January, and I'm going to go through those in a little bit of detail. The documents, what documents will be required? There are a number of documents that need to support a declaration, most specifically an invoice, packing list, CMR documents, health certs. So quite a number of documents that now need to be prepared in order that you do have procedures in place for 1 January. In terms of who will be responsible for lodging the import and export declarations, this question is obviously very important for all suppliers and customers. And this very much depends on your contract agreements. So the person, if we start from the basic answer to that question, is the person who's the importer of record or the exporter of record is the person who's responsible for lodging the import and export declarations, ensuring the accuracy of the declaration, paying the duty. And they can do that themselves in-house, or they can employ the services of a clearance agent or use their freight forwarder or haulier. But either way, whether it's done in-house or whether you employ or outsource the service, you as the importer or the exporter are responsible for lodging or for the quality of the information, the accuracy of the information, and accounting for any customs duties. What are the compliance costs is always the next question. Again, these are coming into effect. And when I'm talking to clients about compliance costs, I generally would say to everybody, do a cost benefit analysis. There's two choices, as I said. You can either take the requirements in-house and lodge the customs declarations yourselves, in which case you are going to need to train your staff. And as Simon mentioned, the EI Clear Customs Initiative is available there for staff training. But there is an additional cost in terms of staffing. Potentially the need to go 24/7, depending on your shipping, and then some software costs. Alternatively, if you outsource the declarations, then you are looking at an average in Ireland of about 50 to 60 euros a declaration, an average in the UK of about 30 to 40. So generally, when I'm talking about the cost of documentation, and if you're responsible for, say, the export document and the import document, a reasonable rule of thumb to take is it's 100 euros per movement. What happens with agri-goods is going to be another big issue, which I'm not going to deal with today. It's really a session in itself, but you will have the requirements to register with DAFM under the Traces system and ensure that you have the appropriate health certs and pre-notify the department in advance of any imports. This one is important in terms of what is the risk of delays. As Simon also mentioned, it's inevitable that there's going to be delays from 1 January. There really isn't any way around this. And that's really going to come about because of a lot more trucks at the ports and people who are perhaps not as prepared as they should be, and additional checks that are inevitable. So again, what I can say to clients at the moment is there are certain elements in terms of managing delays that you will not be able to have control over. So you don't have control over whether you're held for a random audit check by customs. You don't have control over the driver in front of you who does or does not have the right documentation. But what you do have control over is the quality of your information. So when you submit the declaration to customs, you need that to be 100% accurate. And that will minimize the risk of routing errors, desk-based audits, full container checks, etc. One of the interesting statistics that the Department of Agriculture always give is that 60% of declarations that take place at the moment in terms of imports from outside the EU don't get through the Department of Agriculture. So they simply don't get cleared by the Department of Agriculture before they even get to the customs side of things. And that 60% is based on inaccurate information and just wrong paperwork. So nothing wrong with the products, simply inaccurate information. And that's a statistic that's going to carry through. So very important to use the next 10 weeks to make sure that you are prepared, have the procedures in place, and know exactly what needs to be on the documents and what supporting documentation needs to be in place. Are there changes to VAT? Yes, there are going to be changes to VAT. So you will account for VAT at the moment on your intra-EU returns. That's obviously going to be gone with the EU or with the UK, no longer part of the EU. So in normal circumstances, VAT is charged at the point of import. So if you're importing at the moment, you'll know that you pay your import VAT and your customs duties when goods arrive at the port. The Irish government is proposing to simplify that by allowing you to account for VAT on your VAT returns, or you account for your import VAT on your VAT returns. And that's going through the Dáil at the moment in the Brexit omnibus bill. So just keep in touch really on that to ensure that that has gone through. Similarly, in the UK, there's proposals to pay your import VAT through your VAT returns and not on import. There are slight conditions attached to those requirements, but that's very specific. So I would say on the VAT side, just keep an eye on the news, keep an eye on the BDO website. We will be issuing bulletins, but you should be able to account for the import VAT through your VAT returns. Another thing to take into account is what if you import and re-export. So let's say you're manufacturing a product in Ireland and you import, let's say, the plastic packaging, make the product, re-export it back to the UK. If you did nothing and if there is no trade agreement, you would be paying an average of 6.5% customs duty, which is not recoverable on the packaging. But if you can show customs that the product was imported into Ireland for manufacture and then re-exported, so exported back outside the EU, then that duty will be written off. So do look at your supply chain and see, are you importing goods from the UK for re-export back outside of the EU? And if so, there are duty reliefs available. And then finally, where do I get a clearance agent if you do decide to outsource the service? And the reason I put this up as a specific slide is that we have a severe shortage of customs clearance agents in Ireland and in the UK. You will have seen a lot of news reports on this, particularly from the UK side. We're short about 3,000 customs clearance agents in Ireland, about 50,000 in the UK. So this conversation and this, starting to look at how you're going to manage your clearance is really critical at this point. If we look at the impact on Ireland, and again, this goes to managing your delays and managing your procedures from 1 January. The declarations are estimated to increase from 1.6 million to 20 million. So we can see a significant increase in the number of customs declarations that are going to be lodged. We've got an increase in the transit required transit shipments to the land bridge, with, as we know, about 80% leaving Ireland for continental Europe. So new requirements to use transit, and then the systems in the UK, GMVS, the systems in France, Brexit IT. So quite a lot of processes and procedures to put into place here. We've got 92,000 new traders now about to enter the net. So this is 92,000 new traders who've never been involved in customs before, who will now have to comply with customs rules from 1st of January. And as I said, a projected shortage of 3,000 agents. And the reason I put this slide up is not to scare everybody, but it's to say really important now at this point. There's 10 weeks to go. You must look at your compliance requirements. How are you going to import? How are you going to export? Do you understand the customs information that either you need to enter to the revenue or your customs agent needs to enter to the revenue? You need to make sure your quality of your information is spot on. If we're looking at an increase from 1.6 to 2 million, that's a lot of new declarations going in the system. 92,000 traders completing customs declarations for the first time. You can see where the delays are going to happen. So if you take away one thing from this presentation, it's really to start to be prepared. So then how should you prepare, I suppose? First of all, I've just put up a link to our customs clearance site, Declaran. So this is a joint venture that BDO and Vexco set up for clients and for clients of our networks, where they were just simply unable to get a clearance agent. This was in the lead up last year to a hard Brexit. So if you are struggling with the customs clearance agent side of things, or if you can't source one, don't want to do it in-house, or your hauliers can't support you, then do log on to the Declarant site. And we are taking customers obviously on a first come first serve basis, but there'll be a lot of information there as to how to clear your goods, what information you need to provide to customs. And we've also tried to include links to the main application so that you don't have to be searching around the revenue site or Google. So there's a link into getting your EORI, getting your deferred payment account, etc. So all there on the front page of the Declarant website. And this is the document that's causing all the problems. And this is a customs declaration. It doesn't quite look like this anymore, unfortunately, from November. This is probably the second iteration or third iteration of a customs clearance document. This is what it used to look like in the 80s. And then in the 90s, it went to a more electronic format, so without the pretty green boxes. And now in November, I think it's the 2nd November, we've got a new system coming into place called AIS, which will, the information will be the same, but the system completely changes. So you will need to be familiar with the AIS system. AEP, which is the system that would have been used, continues for exports, but not for imports. So just to wrap all that up, in how does that actually impact on the movement of your goods? So at the moment, if you're shipping goods into Europe, you've no customs controls, and you obviously want to keep an eye on the time. Your goods move freely, and that's the purpose of the single market. Going forward, however, on a very simple basis, we've got our truck, and we've got our ship. And if you're leaving, let's say you're leaving Ireland for the UK, you've got a customs control on leaving, and I've put in Dublin here, but customs control leaving Dublin and a customs control entering the UK. And in reverse, a customs control leaving the UK and a customs control leaving Ireland. So 2 stops now where there was none. If you're shipping goods through the UK to get to the land bridge, you're going to have to lodge your transit declaration in Ireland. You'll have not so much a stop, but just a check on your transit declaration. And that has to be, that's called a TAD document. You should have that in the cab if you're stopped by HMRC. And then back into Europe, where you need to discharge your transit declaration by presenting the goods to the customs office. So this process needs to be mapped out. If you can avoid going through the UK, I would strongly recommend doing so. There's going to be a lot of holdups in this system. So if you can book space on a ferry to go around the UK, maybe the new Brexit Buster ferry, please, I would recommend doing so. So in terms of preparing, what are the critical steps? And what I'd recommend is, what I say to clients is just download this Brexit checklist. We can send it out after the presentation, put it on your desktop and tick it off one by one. First step, ensure you have an EU and a UK EORI. If anybody does not have an EU EORI at this point, please do log on to Ross Online and just activate it. You'll get it within 2-3 days. It's really simple. If you are acting as the importer into the UK, you need to get a GB EORI. And as I said, the link to both of those is on the Declarant website. So you can go in and simply fill in your details, or link you directly into Revenue and HMRC to make the application. Next, look at, have you got a clearance agent, or are you planning to take this in-house? This has to be done immediately. You need to do the cost benefit. What is the best option for you? If you're going in-house, sign up to the EI Clear Customs Initiative. Make sure you get your training. Those courses are filling up rapidly, and I think they're pretty much full for October. So do make sure to take advantage of that. If you're outsourcing, talk to your hauliers, talk to your freight forwarders, or as I said, look at the Declarant website. If you're talking to your hauliers and freight forwarders, make sure they've experience in the area, that this isn't a new startup. Check that you have the information you need for you or your agent to complete the declaration. And there are 54 pieces of information, specifically classification, valuation, origin, Incoterms. These are very custom specific, and you do need to understand exactly how to actually obtain the details, particularly in relation to tariff classification. If you haven't classified your products at this point, again, the next thing I would absolutely recommend is everybody to download your product list, start with your Intrastat. It's a good place to start, not always accurate, but a good place to start, and go through each of your products and make sure you have the correct tariff classification. Again, the Declan website has a link to the TARIC, which is the EU tariff database, and the new UK global tariff database. So you'll be able to get your tariff codes and duty rates there. Check if you have a duty liability. So when you check TARIC, and actually I've put the link in there as well. So we've got our TARIC website, which is our EU website, and then we have our UK website for the UK tariffs. So you can check here and see if there's no trade agreement, will you have a duty liability? It also gives you the links to your tariff codes. Next, you want to look at how are you going to account for your customs duty. Do you want to pay duty on arrival, in which case you will have what's called a TAN account. So when you got your EORI number from revenue, you will also have received a TAN account, which is like a customs current account. And you can lodge cash into that. And then as the goods come in, it gets deducted from the current account. Or you can, oh, I didn't put a link in there, sorry. Or you can have a deferred payment account, which enables you to pay duty in one lump sum from your bank the month after the month of import. So for all your imports, for example, in January, you'd pay your customs duty on the 15th of February. In order to have the deferred payment account, you do need to give revenue a guarantee for the duty that's been suspended. That will be twice the duty allowance. So, you know, again, what would your duty be in January? What would your duty be in February? Put those together, that's your guarantee. And that can be either a cash guarantee or a bank guarantee. Those duty deferment accounts take at least 8 weeks to get through, if not longer, if you're dealing with guarantees. So you absolutely need to start applying for those as a matter of priority. You need to understand the procedures at the ports in Ireland. And in this regard, what I'd recommend is looking at the revenue website. So if you Google revenue Brexit events, there was 2 days of revenue Brexit presentations took place on the 5th and 6th of October. The one on the 5th of October has a number of very practical presentations as to how goods are going to move into Ireland, out of Ireland, and under transit. So 3 different presentations there on the revenue website. Take about half an hour each, but absolutely look at those, go through them. They'll give you the details at a very granular level as to how the trucks are going to get on the boat, details like pre-boarding notifications, and the similarly on the other side in the UK. So very specific detail that you do need to know. Next, check, have you talked with your customers and suppliers? I know people are reluctant often to raise this conversation with their customers, with their suppliers, but at this point it's necessary. If you don't know who's acting as the importer into Ireland or the exporter out of Ireland, and similarly into the UK and out of the UK, this decision needs to be made. I know from working with our clients that a lot of Irish companies are being required to continue to deliver to their UK customers on a delivered basis. And that's now translating into delivered duty paid, which is an Incoterm. So sometimes if you hear the word Incoterm, it essentially means what's the contract with your customers and suppliers from customs perspective. And if you are delivering on a duty paid basis, you're going to need to be registered for VAT in the UK, and you're going to need to be able to lodge your customs declarations in the UK, or take advantage of the simplified procedures which have been introduced. Unfortunately, it's very difficult for Irish companies to take advantage of the simplified procedures because for the most part, you do need to be established in the UK to qualify for those. But again, critical timing issue here. If you need a VAT registration in the UK, that's going to take at least 2 months. So you need to apply for that VAT registration urgently. If you're importing agri-food products, make sure you're registered with the Department of Agriculture and registered with Traces. And again, the Department of Agriculture website, again, Department of Agriculture /Brexit, will give you the link direct into registration with themselves and with the Traces system. Traces is Traces is basically the system you need to lodge your health certs into in order to import your goods in the first place. And in most cases, you're going to require 24 hours pre-notification to revenue, or sorry, keep saying revenue, to the department to get approval for those imports. Check the single market regulations. Again, really important. If you have been buying goods from a UK importer or UK distributor, make sure that they are suitable for the single market. You may need to register as the EU entity you'll be the EU importer. So a lot of labeling and single market regulations that need to be complied with. And again, in that situation, check the standards, the FSAI for food standards, and the name is gone. Just but the Standards Authority. A lot of Brexit Bites presentations going on to help you with that. Make sure your staff are trained. Again, really, again, can't emphasize enough. Take advantage of all the training opportunities that are out there. There's a significant amount of support available from, I said, the EI Clear Customs Initiative. Your local LEO will be running customs training, one-day customs training courses on a constant basis. Make sure you have signed up for them and have attended them. That's a free course. It will guide you through the whole of customs, import and export at a high level. And then there are, the various other courses that you can also take advantage of. If you're in the food industry, make sure to contact Board BIA. Again, they run they run customs training specific for the food industry, along with mentoring programs. As I said, check your VAT registration. Look at duty planning. So look at your supply chain. Do you import goods and re-export goods? If so, look at saving duty. You do not need to pay customs duty on goods that you import for re-export. Have you looked at AEO? Again, I'd go back to what Simon said. If you haven't, don't even go near that at this point. You will ultimately want to be an authorised economic operator, but that's not for now. The other points are more important. If you're involved in the movement of alcohol or tobacco or oil, make sure you understand the implications for the excise movement rules. And if you're involved in transit, make sure that you've talked to your hauliers and freight forwards to cover the transit obligations. So I know that we're kind of tight on time, so that's a very quick run through the customs and trade key steps that I would recommend everybody take. If you do want further information, do sign up to the BDO newsletter service. We send out bundles of information, probably too much, but sign up there. We can't send it out without approval from GDPR purposes. Sign up to Declaran if you need further information regarding the customs clearance service offering and what's available there. And as I said, make sure you do take advantage of Enterprise Ireland and LEO trainings and Board BIA. Eileen, sorry, that was my quickest, fastest run through possible.
It was absolutely fantastic, Carol. And just to reassure people, if they've been there frantically trying to write everything down, the team in LEO are going to send out in the next couple of days links to all the presentations, including yours, because there was such a wealth of information there and such a clear and practical guide to people as to what to do. So thanks so much for that, Carol. And we're going to move on now to see, have people been doing or taking some of these steps? We have a couple of companies on board here today, and the first person we're going to is Ronan Coughlin. He's down in Offaly. He runs KO Kombucha, a company set up in 2017 making fermented teas that are good for our guts, and which are being sold in over 100 outlets across Ireland. So we're just going to ask Ronan and then our next company. Ronan, how have you been preparing? Have you been doing everything Carol said you have to do?
Well, we're not exporters, so we're just a really small domestic food producer here in the Midlands of Ireland. So no, we haven't been doing that, Eileen. But it's great information, and we'll take all of that on board, and we'll be looking for our ERO numbers and all that sort of stuff. But our Brexit story actually began with Brexit. So we lived in the UK. We were living in a very trendy, hip area in East London, and there were pictures all over the place at the time, emulating the social fraternal kiss of Leonid Brezhnev and Erich Honecker, where they kissed each other back when the Berlin Wall fell in 1990, but it was actually Donald Trump and Boris Johnson. So there were all these images of what was going to happen in the future, and everyone was laughing about this stuff at the time. It was quite a liberal area to live in, and London voted quite predominantly to stay in the EU. The blow of Brexit was a really disappointing shock for us, so we decided that we were going to move back to Ireland. Within a year, we had decided to start our own kombucha brand that was organic and move back to the Midlands of Ireland, where I'm originally from. So Brexit has had a huge impact on our lives and our decision making over the last few years. How have we been preparing for Brexit? As extremely small producers with a bootstrap lean model, we had to start from a very small starting point, which means that you can't buy things in bulk. You have to use smaller suppliers. You have to order smaller orders. So we were ordering quite a number of different things from the UK. We had started in the UK and London, so it made sense to us at the start. We always thought that UK products had really good quality, and we were disappointed in the UK, and that's why we left. So I started to think about this about maybe a year ago or more than that, that Brexit was coming and that we had to pay attention to our suppliers and where we sourced all of our bottles and caps, our sugar, tea, even filters for the water filtration. And we decided that the best idea was to use all Irish suppliers. So our water filters come from Cork, all our brewing equipment, the smaller equipment, the tanks come from Italy, the brewing equipment comes from the homebrew company in Mount Mellick, which is less than 40 minutes drive from here. So I spin down to them. Our sugar was a huge issue with Brexit. Suma have decided to stop supplying small producers like me in Ireland. And I emailed them about 3 or 4 months ago to make an order. I made an order every 3 or 4 months. And the automated message I got when I went onto their online portal was that we're not shipping to your location any further. That was a huge blow. I was thinking, right, how am I going to source my sugar now? I've depended on this company. I had tried the larger sugar manufacturer beforehand, but they said that I was too small and that they wouldn't send me a small quantity. But because we're scaling our business over the last number of months, we have the ability to order things in bulk now. So we bypassed Suma. We got a 30% reduction in the price of our sugar, and I ordered enough sugar to last us for 1.5 years. So that was a huge win for us, and it was an inadvertent folly on behalf of Suma, because I know I'm a small producer, but I am scaling and I am planning on becoming a bigger producer. And ever the optimist, I ordered a load of sugar. So that's one thing. Then secondly, I have tea as a main ingredient in our product as well. So I've had to source tea. We used to source companies from the UK that supplied different various teas. And over the last few years, I've decided to wean out those companies and go direct to source as well from Germany. Sonnentor is the company that we use with bulk tea. And so now I also had a huge issue throughout coronavirus lockdown number 1 with supply chain issues with regard to tea, where the German companies weren't using smaller courier companies to actually ship and export to Ireland. They were only exporting to larger countries. And I had a 5-week delay for tea. And then that scared me. So I decided, okay, when Brexit comes, there could be a 10-week delay, there could be a 15-week delay. I don't actually know what's going to happen. So that inadvertently made me order over 1 year's worth of tea. And now I have enough tea and sugar to brew away for at least 1 year or a really good 6 months. And lastly, then we bottles are a very large ingredient, or a very large part of our producing here in the Midlands. So we've also decided to source our bottles directly from Germany and buy them in bulk as well, because we have enough storage space to be able to get them here. So we've ordered 5 pallets of bottles, because we're not in a position to order a container yet, but we have ordered 5 and they're on their way now in order to prepare for delays that will be coming in January. So it's all been done. I'd say I've sorted out the tea, sugar and bottles in the space of the last 6 months for the next, well, at least 6 months in the new year.
Fair play. That's terrific, Ronan. I mean, you know, going to Irish companies, that's one of possibly the benefits of Brexit, that there will be more business generation within the country, and then stockpiling, you know, just to be sure. Do you think you're ready now for Brexit?
I don't know. I think that we've made inroads to prepare ourselves somewhat, but because of the land bridge and 80% of all Irish imports or exports going through the land bridge, I'm not as optimistic that there won't be delays in the future. So although I have enough raw materials, supply chains with bottles and crown caps and things like that could still be affected. So I'm trying to sort that out now. And if I was able to talk to you in December and I had my bottles, I'd say I'd probably be a bit more prepared. But we've definitely done a good job to source everything we can from Ireland and then everything else in bulk from the EU.
Fair play. That's brilliant. The best of luck, Ronan. We're going to move on now to our second company, a different kind of it's actually a group, the McMenamin Group, based in Donegal, owned by Seamus McMenamin. So they've McMenamin Engineering, which is a leading structural steel and cladding supplier. And then they've Mantis Cranes, and they've also Mantis Cranes Limited, which is based in the UK. And we're joined by Seamus McMenamin and Anne Swan, who's the financial controller at the group. And I think, Anne, you're going to take the first question or two. What have you been doing as a group to prepare for Brexit?
Well, I'm absolutely parched now for a cup of tea after listening to Ronan, but well, it feels like a very long time ago, we identified that we had limited knowledge about customs and importing and exporting. So what we had to do immediately was educate ourselves. So we started attending workshops and courses and presentations, and we just got familiar with the whole process of it. Got used to the terminology, listening to the steps involved. And that was really a really important first step in getting prepared.
And are there particular actions then you've taken, Anne, on foot of what you learned?
Yes, indeed. Plenty of actions and plenty more to do after listening to all the presenters this morning. Well, at least, first of all, top of the list, we got our EORI number, because you cannot trade without that. So that's done. Next, we had a look at our suppliers and our supply chain. So after Brexit, purchasing from the Republic of Ireland, no change. After Brexit, purchasing from Northern Ireland, for us, no change for the time being. After Brexit, purchasing from the EU, well, supposedly no change as long as whatever I purchase leaves France, say, and arrives in County Donegal in exactly the same state it left France without being tampered with, and has its transport documentation, no change, supposedly. So the problem is purchasing from the UK. So I'm going, okay, I need to declare that I have purchased something to customs, and I need to pay my tariffs, and I need to lodge quite a lot of documentation about buying or products now from the UK. So I didn't know how I was going to do that. And initially I had decided that I was going to purchase software. But having spoken to a couple of software companies, it was obvious that we were barking up the wrong tree. Our volume of transactions was quite low. It was cost benefit analysis done, it just wasn't worth it. We're better off going with a customs clearance agent. So I have engaged a customs clearance agent now. And we also have a company in the UK. So it was important that that customs clearance agent had a UK partner, because a lot of our goods would go from Ireland to the UK. And as well with my agent, we have the use of their deferred accounts, which is quite important at this stage. Now, and ever learning, I will be learning from the customs agent, even though I'm quite aware that the responsibility of what goes on all the forms, especially the SAD form, lies with us. So now what we're doing is we've got our product list, we've got all our products, and we're getting the tariff code now to attach to all those products and looking at the duty rates applicable to all those products. And that's where we are at the minute. We're now getting more trained again, because there's a couple of courses coming up, customs courses, and it's, you know, it's all coming to the fore now. It's time to get a bit more brushed up on things. But I think, fingers crossed, we're not too bad at the minute.
Fair play. That's brilliant. An awful lot of work done, but more yet to be done, as you say. Seamus, would you like to sum up for us? How ready do you feel the company is now for Brexit?
Well, up until this morning, I thought we weren't too bad. But after listening to Simon and Carol, I'm beginning to, I have more notes taken than to go through with Anne after this. So we'll be doing a sit down after this. We thought we weren't too bad. Like we thought that, or I think that our customer, the fact that we've got a company in the UK is a big advantage, because anything we're selling to the UK is going to go through our company in the UK. So we will only possibly have the one customer there. So that's probably a help. All in all, like, we know we're going to experience all the things that have been mentioned this morning, and the big one for us is logistics. That we've been used to being able to put a piece of plant or a piece of equipment on a trailer or on a truck and have it in the UK tomorrow morning, or vice versa. And our customers have got used to this, and supplying spare parts was more or less similar. That's not going to happen. So, like, we have put in place some steps or measures to try and deal with that. But I think that we're very much like a lot of companies, is that we're waiting to see what happens on the 1st of January and the weeks thereafter. And hopefully the customers will be patient with us, and that we will get through it. But we just have to do, like, some of it will be a wait and see.
Very best of luck, Seamus, to yourself, to Anne, and to Ronan down in Offaly. A lot of hard work ahead of you in uncertain times. We've a little bit of time now, just as a brief amount of time for questions and answers. And a lot of you have been putting in questions into the Q&A bar at the end there, and the busy team in Leo and Donegal have actually been answering a lot of them directly. Now, they're also going to download all the questions and issue a summary to you over the next a few days or so, which will kind of give the answers to the general themes that have been coming up. But just a couple of questions that maybe weren't touched on, because I know our contributors here really gave us a mountain of information already. But there was one question in from Prakash Kamat. He was wondering if there's any information out there in relation to the software import and export and business, and the impact in general on the IT industry. Would anyone like to chat a bit about that, IT?
Is that for, sorry, is that a services? Yeah, is that a services issue, or just explain that question to me again?
He's looking for information about software export and import and the impact generally on the IT industry of Brexit.
Okay, there's probably two aspects to that question. One I'm not totally qualified to deal with, which is on services, which is a kind of a specific area in itself. But if we're looking at the movement of software between the UK and Ireland, software in itself wouldn't have a requirement for a customs declaration if it's, say, downloaded from the cloud or emailed. If it goes on a carrier medium like a PC, then you will have to declare it to customs. There shouldn't be any customs duties in that regard, but at the same time, you would have to make your import-export declaration. But most IT providers are going to provide that software by way of a download from the cloud. The one thing that you do need to now be aware of is that if you're exporting an encrypted software, and the UK now, because it's outside the EU, won't qualify for the kind of the free movement of goods within the EU, you may need an export license. So encrypted software tends to need an export license in order to export it from Ireland/the EU, and you'll get that from the Department of Business, Enterprise and Employment. So check your encryption levels. If it's not standard software, it's anyway sophisticated, you'll definitely need a license. If it's off the shelf, you may be able to qualify for the reliefs, but you'll absolutely need to check on that aspect.
And there's a question also about professional services in general, and I'm not sure about the specifics. Professional services that trade across borders, will there be issues for that sector?
There are limitations, certainly, on qualifications, but it's outside my scope of expertise. I'd have to get one of the other partners in the accountancy and audit practice to answer that. But yes, there are limitations coming in.
Okay. There's a question here on EORI. The company is registered in Ireland, but manufactures in China and distributes worldwide. We have an EORI number, but our third-party logistics warehouse is in the UK. Do we need a UK EORI as the product will be shipped out to Europe and worldwide? And would it be beneficial to establish a UK company?
Yes, you will need a GB EORI. That's the first point. And secondly, it depends on the specifics of the case. We do have a lot of requests from Irish companies now for establishing in the UK to enable them to take advantage of simplified import procedures. You may need it for VAT purposes, but you also need to check the impact on tax. So it's not a one solution fits all. You do need to look at the three aspects. Top of my head, I'd be saying you probably do, but I wouldn't go ahead without getting advice on all three aspects. How does it impact on tax, VAT, and customs?
And I know, Carol, you've answered a lot of the specific questions in relation to customs clearance and that. I don't know if someone else wants to pop in here, but somebody's wondering, and it's probably a worry for a lot of companies, will there be a lot of delays in terms of the process and the time involved?
I think that's inevitable. Again, yes, if somebody else wants to come in, so don't want to hog all the answers, hog all the questions. I can keep talking about Brexit and customs as long as you let me. Yeah, I mean, there's inevitably going to be delays, and it's going to be down to preparation. That's what you always kind of look at what is within my control, what is not within my control. The risk of audits at the border, we have a certain statutory number of audits that have to take place. Can't control that, but you can control getting the right documentation into customs, getting your clearance back immediately. Where there were errors, what will happen is if wrong information goes through, you're going to get error routings. You're going to have to link in, deal with customs then to change the entries. You might have a desk-based audit. You're going to add errors there. It's all about the correct quality of the information.
Okay. There's a question here. I don't know who'd like to take this, but someone is wondering, would there be more information available on Revenue's new automated import system, AIS? That's obviously going to be very important to people. Anyone like to take that one?
Do you want me to pick it up? Yeah, I know the timing is a nightmare for all of us coming into effect in November, just before Brexit. You need to check with your software provider. So if you're using a software provider, typically say Time IT, they will have integrated with the new AIS system. But if you're doing the declarations yourself, you will be using a software provider. Go back to your software provider, ask them for the update on the integration from you to them. They'll be working with Revenue on integrating and updating their system to account for AIS. If you're outsourcing, you need to make sure that your clearance agent, freight forwarder, haulier are up to date on the new AIS system. There's a huge amount of technical detail that I wouldn't circulate to anybody in relation to AIS. You need to be a software programmer almost to use it. But you do need to understand the new systems fundamentally, quite a fundamental number of changes.
Here's an interesting one from Kathy Dunn. Kathy is wondering about bringing in second-hand goods from the UK and Northern Ireland. Does anyone know will there be issues there? Simon, are you moved?
Yeah, I mean, Carol can correct me. I mean, I'm not a trade specialist, but I don't think there would be different issues. I think it's just a question of the values then that would apply to them.
Yeah, it's exactly. It's no different to any other import or export, as Simon said. It's the same rules apply. When you're looking at customs, you're looking at are goods crossing a border. If they're crossing a border, then automatically customs and import VAT kick in. So it doesn't matter if they're secondhand, it doesn't matter if they're samples, it doesn't matter if they're free of charge, it doesn't matter if they're full, third-party invoice products. Once something crosses a border, there's the same customs obligations for physical products, no matter what they are.
Nolene Morris has a question here. She's wondering, do we only appoint one clearing agent? We import 95% from the UK. Can we appoint a clearing agent for this and then a different clearing agent for exports, which is a smaller part of our business?
Yes, you can employ as many as you like.
Okay.
You just need to notify Revenue that they are authorised to act on your behalf.
And Patrick MacGyver has a question here. Will non-food consumer goods coming from the UK have to have the name of the Irish importer on the product label if coming into the Republic of Ireland for sale, or will normal UK labelling be okay for sale in Ireland?
No, you're going to need to, the UK is no longer an EU entity, so you need to comply with European labelling requirements. So somebody in the EU is not going to need to be on that label.
Garrod Kennedy, we provide care services in Ireland for a UK company who pay us from the UK. What do we need to do?
That one's not me.
Anyone know anything about that area?
I mean, the one thing that always springs to mind is things like VAT, but I'm not sure there would be any change in that arrangement because it's a UK-Irish trade.
Yeah, so many questions. Look, we'll probably wrap that up there now because, as I say, there's lots of different questions coming in and the team in Leo are going to summarise them all and send everybody out a summary of the main key issues because there's just so many different areas to look at. But one of the important things to remember in all of this is that there are a lot of supports available. And we're going to chat briefly about those supports now with our colleague Marcella Rudden. She's head of enterprise with the local enterprise office in Cavan, and she's going to chat a bit about the Brexit supports that are available for your business. And I must just mention again that there is another online event coming up on the 12th of November, where it's organised by the Leos, and you'll have the opportunity to have one-to-ones with different experts. So that link will be sent to you also. So Marcella, are you there? You're going to chat to us now, please?
I am, Eileen. Can you hear me all right there?
Yes, indeed.
Yeah, I'm just sharing that. And just bear with me 1 second to get the right screen. There we go. I presume everyone you can see that. Thank you very much, Eileen, and thank you to Michael and the team in Donegal for asking me to join the session today. I think there's been some fantastic presentations and a lot of technical information, and I know a lot of the questions are very technical there, and Carol took a lot of them. But hopefully, I know Eileen will be communicating afterwards. Just there is the Meet the Expert event on November, where there will be a lot of individual experts and mentors joining that panel. So I would encourage people to sign up for those sessions, where a lot of those maybe technical questions might be able to be answered for you. I suppose the key thing I'm going to do is really just very briefly run through the supports that are on offer that you can take advantage of immediately. And Carol has given a lot of excellent information on the customs, which is kind of the key concern for a lot of companies currently. And Simon also mentioned a lot of supports that were available as well from the Irish Exporters Association. But this is not an exhaustive list by any sense of the imagination. These are the key ones that that are accessible now and that everyone should be looking at in order to prepare for Brexit. And whilst there are others I might mention briefly, most people can kind of contact their local enterprise office, or if you're an EI client, you would be engaging with your EI advisor on a lot of the supports. The first one to mention, Eileen, obviously is the Brexit mentors and advisors that are available through the local enterprise office. All Leos have a panel of specialised Brexit mentors and advisors. They're working with a lot of the clients already on a one-to-one basis. But if you haven't engaged with your local Leo and you haven't received any advice as to where do I start the conversation on getting ready for Brexit, very important to do that. It's free, it's no charge, and it's just probably the most important thing to do if you haven't prepared in any way or had any conversation within your business or with your Leo. So a lot of those Brexit mentors and advisors will be participating on the Meet the Expert event on the 12th of November. Carol mentioned the training, and BDO provided a lot of the training for the Leos. The Prepare Your Business for Customs training. These are happening regularly. I will, on one of my slides is the link that you can go to find out where the next session is on. So they're all online, so you don't have to obviously attend one within your own county. So extremely important, they're running regularly, they are booking up fast, but one of the most important training courses for you to do is to log on and register for those courses. And you will see the full list when you go onto the website of every Prepare Your Business for Customs training course that is on over the coming weeks. Michael, just to skip the lean from micro there, Michael obviously mentioned the Enterprise Europe Network. And look, that network is very valuable and a very useful tool for people, particularly if they're looking at other areas of other markets in terms of diversification. So do contact your Leo if you want to have a further conversation about that or to get more information on that network. The lean from micro, this program is, look at most people, if you're an EI client, you have participated in a lot of the lean programs. All clients who are non-EI clients can now come through the Leo for the lean for micro. And I mention it because it really helps a lot of businesses to kind of look at their entire business, look at how they're going to operate on a competitive basis, obviously look at their business processes, the lean tools. It's very much project based, and look, Brexit is a key factor in all of this. So it's a number of days, consultancy days. It's a very low cost to the client. And it covers a lot of different sectors. So, you know, it's not too restrictive in terms of the sectors that are eligible to apply for it. But I think it's an appropriate program and project for you to look at now to help you address issues on Brexit, and something you can take right through into the early part of next year. The Enterprise Ireland obviously have a number of supports as well. And if you're an EI client, you'll be engaging with them on that. The Customs Insights course, online, free. You can register for that, and the link is on one of my next slides. The Ready for Customs grant, and Karen mentioned that grant. This is a new support. It's available for EI and non-EI clients. So you can get up to €9,000 in support to help you towards the recruitment of a person in-house. So if you're going to deal with your customs in-house, that support is there. That person could be working full-time, about 28 hours a week, I think is the cap, or part-time, so between 14 and 28 hours a week. It's €4,500 if you're deciding that you're going to engage someone on a part-time basis, or if you're going to redeploy somebody within your organization that's going to look after customs, you can also apply for this as well. And it does cover not only recruitment costs, but IT infrastructure. Karen mentioned software that you will require. So now there is a deadline on that. So I would advise you, again, the link will come up shortly, to just check that deadline. I think it is actually in December. So a good support for anyone who is going to have to deal with this in-house, and that is something you have to make that decision on based on transactions that you're going to be having to do, and having that cost benefit analysis, as Carol and others have mentioned earlier. Intertrade Ireland, they still have that planning voucher. Again, that's a couple of days consultancy to the value of €2,500 to help you prepare for Brexit. And there is a whole panel of experts there, particularly in logistics and other areas as well. It's a very simple process. You apply online, and that's available there to Intertrade Ireland, who have a very good Brexit advisory service as well through their website. So absolutely encourage you to avail of that. It's another avenue. It's another avenue of support for you. They have a tariff checker as well, and they have a Brexit readiness checklist, which a lot of organisations have for you. I mentioned just the National Standards Authority of Ireland, and I know it was mentioned in previous presentations, and I just want to mention that, I suppose, in the context of CE marking, the NSCI have ran 4 Brexit webinars over the last couple of weeks. I participated in the one on CE marking last week. They're all available, and I have the link in one of the slides there, which will be circulated online now. But it is an incredibly important area and will apply to a lot of people, particularly with the UK now will have their own standard, Northern Ireland, and it's an area that is quite technical, like the customs, but it's one that has to be addressed. So I would definitely advise people checking out the information either through the webinars. Mary White is the head of the Brexit unit and her team there in NSCI, and they'll be more than happy to help you with specific queries that you might have in relation to CE marking. I also, just having it up there, but also Skillness Ireland, I think Simon from the Export Association mentioned earlier, also have online training, and again, that's free. And so there is lots of different places you can get the customs training, and it's most important, I think, to start at that basis if it's relevant to you. And judging from the questions that are there, it's relevant to a lot of people from the 1st of January. Other supports that the LEO have as well is the Technical Assistance for Micro Exporters grant, and this was specifically aimed at individuals who are looking to, I suppose, at new EU markets. That support was a financial support to help people maybe attend international trade shows. That travel may not be taking place now, but there are still a lot of international events where you can meet buyers virtually. And there are a lot of other costs come under that TAME grant in terms of maybe translating certain parts of your website into a language if you're targeting a particular country or region, be it the Nordic region or wherever. There are other costs that can be covered there now when we're in the COVID situation. So certainly one to look at as well. And I also just mentioned, in terms of export, a lot of export programs available through LEOs across the country. So definitely check in with your LEO advisor on those that may be coming up. I've already worked through, just mentioned the Lean for Micro program, so I won't go through that there, and I'm mindful of time, and that's coming up to lunchtime. Just want to run through the links, which are really important. That first link there will take you through to all the customs training workshops that are available across the country. The prepareforbrexit.com, that's the Enterprise Ireland website, excellent website if you're looking for the information on the Ready for Customs grant or the online training for customs. And there are some other supports there in terms of the Market Discovery Fund and other Brexit preparation tools that are available there and very informative. That's the Intertrade Ireland website that will take you through to the planning voucher if you want to apply for that. The revenue.ie, and Cara did mention that, excellent information there. Particularly, they did have those 2 Brexit readiness information sessions on the 5th and 6th of October. Very detailed videos are available online. Technical, take you right through step by step in a huge array of areas. So it is a very informative website and very, even down to a video as to how to register for your EORI number. So do check that one out, most important, particularly if you haven't registered for an EORI number and you need some further detailed information, particularly on the logistics and customs side. That is the link to the National Standards Authority webinars that I mentioned, if you're particularly for the CE marking, and there was one on construction industry as well. And the last one there is the Brexit readiness, and I know it was mentioned in previous preparations. It is an absolute excellent tool. It has all the contact numbers for all the agencies and all the departments, Board BIA, was mentioned, Fáilte Ireland. So particularly if you're in the food or a particular sector, it's very important that you touch base with those particular departments that are relevant to yourself. So all these links will be circulated to everybody. So, and as I say, if you want to contact your local Leo, we will direct you. There is going to be a huge amount of information available, and I know it can be very confusing, but please do contact us. There is support and guidance there for you, and we'll work with you as best we can to guide you through the next couple of weeks. So I leave it there, Eileen, in case anyone has any particular questions, but thank you.
Thank you very much, Marcella. An awful lot of information for everybody to take in there, but obviously a huge amount of support available, which is absolutely terrific. So we're going to move over now to Brenda Hegarty, because Brenda is going to kind of wrap it all up for us and talk about the next steps. Brenda is the Assistant Head of Enterprise at Leo in Donegal. So Brenda, how do you take all that in?
Well, certainly, Eileen, thank you very much. And it's just reminds me, it's one of those subjects. Brexit is on the horizon for the last 4 years, but no matter how much you think you know or how much you think you're prepared, there is always new information. So the value, I hope, of this morning's session has been asking the question, are you prepared? Getting some very detailed and practical steps on how you can continue on that preparedness journey, no matter what stage in the journey you're at, and what supports are out there, because Brexit is real. Unfortunately, on top of COVID, it is a very challenging time. But with 2 months to go, I think the takeaways that I got this morning was that there is still time to prepare. And what you now need to do is think about, first of all, book on to the next part of this session, which is the B2B and Meet the Expert online on November the 12th. Again, it's a free event and it'll allow you to have one-to-one links with experts on a wide range of subjects. You got a lot of information this morning around the links to useful information, and it's important that you take these steps. Register for your EORI number if you haven't already done that. Use the supports that are available, and particularly reach out to your local enterprise office and the other agencies in Enterprise Ireland and others that will guide you and help you with any specifics. Look at your supply chain and also the opportunities that this challenge presents, because there will be companies looking for supply opportunities which you might be able to feed into, or again, look at supply options within Ireland and Europe that maybe perhaps bypasses the GB market. Communicating and identifying who is responsible is critical. So having clear understanding of your products, the commodity codes, the potential tariffs, and who is going to be responsible for the customs work within your organisation. And be very particular around regulatory requirements. If you're currently getting certification from the UK, that needs to be transferred into a European certification process. So overall, and then look at if the GB is being used as a land bridge, whether you can, as Simon indicated, have a more direct route bypassing that land bridge option, or being prepared for delays, as delays will be inevitable on the 1st of January. But overall, there's some great takeaways there. There is the opportunity to prepare, and there's a both focus on what you know. There is going to be paperwork regardless of the outcome of the political negotiations. So again, focus in on that. So I'd just like to conclude now by really thanking you all for joining us this morning. I hope you found it valuable, and you hope you connect again with your local enterprise office and our event on the 12th of November. I'd like to thank our panelists, which have given us such expert opinions and advice this morning, and in particularly the two companies, Seamus and Anne from McMenamin and Ronan from KO Kombucha, so that we get a practical insight and their honesty that perhaps they're not as far down the preparedness as anybody else, but you know, that's important that we all know there's different pathways on that journey. For Eileen in particular, for MC and her brilliant work this morning, connecting it all together. Our partners in the local enterprise offices and the network, Enterprise Europe Network, for supporting and organising the event with us, our colleagues in Enterprise Ireland, and in particular our own team, Yvonne, who's taken charge of the technical, Seamus and Eileen and Margaret. So really big shout out to all of those. So thanks very much for connecting with us this morning. We wish to hope you the best wishes on your Brexit journey, and please do, as we said, reach out to your local enterprise office for any support that you need for preparing for Brexit. Thanks a million. Bye-bye.
Brenda, thank you very much, and thank you from me, and as someone who's not involved in business, I really wish everybody involved there the very, very best of luck. It's a hugely challenging time ahead for all of you and for the country, and it was a pleasure to be part of this today and to see what supports are there, what information is there. It's a lot to take on board. But I really hope that for everybody who joined in today, that they really got something out of it. I've no doubt you have. And just to reiterate again, that there's a recording of this being made available. The questions have been downloaded and will be answered and circulated to you. So the support goes on, and all that information, if you didn't catch bits of it, it'll all be there for you to catch up on. So the very best of luck in your Brexit journey, as Brenda calls it, and enjoy the rest of your day before lockdown tonight.